When it comes to the markets and the news, does it ever confuse you such that some type of news release comes out and the market behaves in the exact opposite of what you would expect? Perhaps it was a good piece of jobs report, or maybe it was a bad GDP report, and then the market does the opposite of it. It can be very frustrating. And that's because those are just singular data points within the string of a much larger data. And so the question becomes is, can you really anticipate, forecast, possibly even predict what the market may do in a shorter time frame? And so what I want to share with you today is I believe that this can be done with a style of analysis called Elliott Wave Theory. And within Elliott Wave Theory and just some general technical analysis, which is chart reading, we can identify some symptoms in the current market environment that suggest that the U.S. stock market is perhaps in the early stages of a larger correction. So let's go ahead and dig into the charts. Here we're taking a look at the Dow Jones Industrial Average. This is a weekly chart, and I wanted to go back and stretch this back to the great financial crisis low of 2009. Now within Elliott Wave Theory, we have 5 different main patterns, and one of those patterns is called an impulse wave. And within this chart that we see here going back to 2009, the large rally off of that 2009 low is a larger impulse wave that I believe finished in early September of this year. So it was a wave that began in 2009 and that finished in September of 2020. So this is a longer term wave. And what happens after an impulse completes? Well, I want to invite you to watch another video that I produced that says, Elliott Wave, what happens after the impulse? Check that out. And I use the Dow Jones as an example. But nonetheless, it suggests that there is a larger correction coming. But I want to talk about some other symptoms that we have in addition to this wave count here. So first of all, you'll notice that the high that we've seen in 2020, this high is below the high that we saw in the early part of 2020. So the recent high here in September is lower than the high that we saw in February. Now I want to contrast that to the Nasdaq, okay? And again, going back to the trend that began in 2009, notice how Nasdaq has been conforming very well into this price channel to the upside. Now recently, this new high that we saw, was not confirmed by the Dow Jones Industrial Average. What does that mean? Well, when we say that the markets are confirming one another, you'll notice this high was the one that occurred on September the 1st. That was a new all-time high for NASDAQ. But for the Dow Jones Industrial Average, remember, it created its all-time high back in February. So that's a very important piece of data, because what this suggests is that the rally that we've seen off of the March low, and really the rally for the past several years, of late has not been a broad-based rally. So when you have a very strong economy, a very broad-based economy that's doing very well, you should see a lot of the stocks rallying together. And when you get a situation where some of the U.S. equity averages are making new highs and some of them are not making new highs, that is a symptom of a tired trend. And with this tired trend, we've got the potential for a reversal. So not only do we have general technical analysis showing that we've got a NASDAQ that reached out to a new high in September, we've got a Dow Jones Industrial Average that did not reach a new high in September, we've got a completed wave count within Dow Jones, which means from an Elliott Wave perspective, we can count the minimum waves in place. Therefore, this is ripe for a larger correction. And again, I want to invite you to watch that video on Elliott Wave, what happens after an impulse, so you could see what exactly we would be looking at. Now, I also want to pause, and if you like these types of videos, I would encourage you to go ahead, leave us a comment, give us a thumbs up, and let us know that you like these, and we'll be able to produce more of them as time permits. So within Nasdaq, we've got an unconfirmed high that is not confirmed by Dow Jones. Let's dial this baby in on a one-day chart because we got some really interesting things going on with the Nasdaq. All right, so remember, this yellow channel is a channel that goes back to the 2009 low. So it's a channel that's been in place for 11 years. It's been respected. Now, when you get to the end of a trend, in this case, Nasdaq being technology heavy, it overshot and punched outside of this price channel. And that's not uncommon, it does happen. But usually when you get an overthrow outside of the price channel like this, then many times when this comes back inside the price channel, then that is another symptom and an indication that a larger correction is developing. Okay, so when we take a look, it was in July when Nasdaq pumped up outside of this price channel. Okay, and it continued to rise on up into that new high in September. Now, since then, it's come back and it has rested on the top side of this price channel and has since bounced because this price channel can act like support and resistance. So I do think that this will end up being a partial retracement, meaning that this bounce that we are currently seeing within Nasdaq, I believe this bounce is going to hold below the high that we saw on September the 1st, and that this may produce a move lower that would pop back inside the channel. Now, once we do pop back inside the channel, if we do, we never know for sure until after, but if we do pop back inside this channel, this market is going to be at risk of moving back down to the midline of the price channel. The midline of the price channel is right here, okay? And that's around the 9,000 mark within Nasdaq. That's about a 30% correction off of the highs. Now, it doesn't have to stop there. It could continue to move even further and work itself down to the support line of the price channel. And then that could take it down into the low 8,000s, depending on the timing of it. So this is just the NASDAQ, which is tech heavy. And obviously you had your mega cap giant stocks that were making this index move higher, and the broad market just wasn't following along, as we've seen with Dow Jones. Now let's take a look over at Dow Jones, and let's take a look at this. So within this average, we've got some interesting resistance levels coming into play. Right now, prices are sitting on top of a box of resistance levels that have come into play going back into early September. So I think Dow Jones may dribble a little bit higher from here, but I think the price increases are going to be relatively limited. If the U.S. stock market's getting ready to fall out of bed, it's probably going to turn over here pretty quick. I think it's a lower probability that we're going to see the stock market, whoops, wrong arrow. I think it's a lower probability that we're going to see this stock market up above this 29,000 mark. I think it's going to hold below this high that we saw on September the 1st. And this is going to keep this market at risk of falling. It may fall before the election takes place. It may fall as a result of the election, because if it's a contested election where we don't know our president, where we don't know, maybe even some of the congressional seats until December, maybe even January, it's not far-fetched, because if we're going to have a lot of mail-in ballots, that could lead to a lot of delays in really figuring out, if it is a close election, who has really won and those particular seats. So it could be chaotic, and the stock market may be signaling to us ahead of time that this is chaotic. But I've written about this beginning on September the 4th, right after this high that we saw, that after that completed Elliott Wave count, that we can tell and at least determine that the minimum waves are in place for a larger correction to take place. This would be, something of magnitude of greater than 40%. And so if you'd like to stay in tune with the weekly Elliott Wave newsletter that I put out, feel free to join that list in the comments below. And I want to wish you all the best of luck in your trading. We will talk to you soon. Take care. Bye now.